first question I'm going to ask, you're all going to say yes and no as you introduce yourself, and then of course you give us a bit of understanding on who you are. Obviously, we're talking about the path to IPO. I will explain maybe later, but I think we all know what IPO, because the moderator did a very good job, sorry, the host, on explaining what we're talking about in regards to IPO. But the first question is an African IPO worth it? So as you are introducing yourself shortly, let us know yes or no if an African IPO is actually worth it. Should we start with you, Philip?
How many lifetimes do you have? If you want to be bold and gray like I am, maybe. If you want money fast and quick, no.
Give us what you got.
So, my name?
Your name, and then if an Africa IPO is worth it.
No, that's what I was saying. For an African IPO...
Oh, it's a lifetimes?
Yeah, it's how many lifetimes do you have? It's a...
Okay.
What someone once said, entrepreneurship is death by 1,000 cuts. My name is Philip Gasaatura. We're here based in Kigali, and I enjoy working with companies, but not from a tech only, but also from a M&A perspective. So that's what I do.
All right, thank you, Philip. Yemi, you got that question. If an African IPO is worth it, and then please also respond by introducing yourself.
I think in the long run, it is worth it. It would be worth it for the continent. My name is Yemi Keri. I am a digital transformation technologist. I also am the co-founder for Rising Tide Africa, the largest female-owned angel network on the continent, and most recently, the president of the African Business Angel Network.
All right. Thank you very much. IK, over to you.
Sure. I think I can already tell I'm going to be the contrarian on this part, so I'll embrace it with my full chest, as we say in Nigeria. Is an IPO worth it? Yes. I think it's really looking at the conditions to get there, and how to get there is the bigger question. And then the time frame as well. My name is Ike Eze. I'm managing partner at Beta.Ventures. We're an early stage tech investor. We invest in Pan-African companies that are very focused on tech sector, so fintech, logistics, health tech, ed tech, med tech, energy, and then of course pure tech as well.
All right, thank you so much. Bobby, over to you.
Yeah, good afternoon. Thanks for having me.
Yes, pleasure.
I will also be a contrarian, just even in the response. So first I will introduce myself. No, not to your answer, to my response, to the ordering. So I'm Bobby Pittman. I'm here as chairman of the Development Bank of Rwanda, the National Development Bank here, which I'm very honored to serve on the board. I encourage folks to go look. We're primarily a lender across multiple sectors, both directly and through banks here in Rwanda. And then my profession, I've co-founded 4 companies at this point: Kupanda, Frame, Nithio, Maven Records, which we had a partial exit last year, and now here, Oath Africa, where I'm founding a new company here in Rwanda. And so I would say, I'll be honest, I will say, as a business builder myself, I don't really focus on that. Like, I feel like it's actually a very hard thing to determine. I think people also think too much about the exit, when in fact, if you build a great business, you'll hear lots of different discussions.
Yeah.
And there will be lots of different types of exits. And at least to me, I would argue today that a lot of the landscapes and thematics that are necessary for both an IPO, but also other types of opportunities, whether it's private equity or strategic acquisitions. Thank you. Thank you again for having me.
Thank you. Thank you so much. Fadilah? You got it?
Yeah. Well, thank you, Hannah, for having me. And it's a privilege to be sharing this stage with the president of ABAN. And congratulations to you. Yes, my name is Fadilah Tchoumba, and I'm the CEO of the African Business Angel Network. Is IPO possible? Absolutely, yes.
Okay.
And as we dig further, I think I will be able to unpack my arguments and perhaps maybe support them with actual facts. And hoping that when we end this day, we'll all agree with me and work together to make it even more possible and faster.
Excellent. Thank you so much. So let's jump quickly into our first question for Yemi. Wanted to find out, in your opinion, with local pension funds and insurance companies potentially making more meaningful allocations to venture capital, how can we as an ecosystem facilitate connections between these institutions and promising startups? And how can we then reduce the dependency of international capital and pave the way for more IPOs?
Okay, thanks, Hannah. When we start talking about IPOs, the first thing that comes to our minds is startups and VCs. But if we take a step back and look very closely at this, it is to be a game changer if, like you said during your founder's speak, we can get more local capital coming into this ecosystem and believing in this ecosystem. I think that would be a game changer. I think for our pension funds, our insurance companies, and institutional investors, the main element you would see is that they are risk averse. And because they are risk averse, they are looking for stable, predictable returns. But if you look at the times and how the ecosystem is maturing, take, for example, the South Africans PIC, they're sitting on about $150 billion. And what they traditionally would have were doing was with real estate investing in mining, but more recently they have started to explore VC funding. But what they're doing is peculiar to this environment because they're exploring it based on some structured funding, some structured financing. And so it's important that we start, as you talked about Ghana, right? The Ghana Ventures Capital
And
Trust.
yeah.
Now they are defining how they're going to start investing in VCs and early stage. And so for us as a continent, we need to continue to help these institutional investors and local capital see that early stage investment is really not high risk, but it can be done if we can have our own different types of instruments. IFC, the IFC Startup Catalyst Fund, right? They're doing that as well. But it's not only the responsibility of this investment investors. The startups and the venture ecosystem also have a role to play. I would not be encouraged as a local investor to invest on the continent if I am not put in that comfortable position. So the corporate governance, the regulatory compliance, the financial transparency, it's very important for all of them to be able to do that. And if that is not done, then the likes of Flutterwave would not have been able to raise for Nigerian capital. There was an avalanche when they started to scale up after the international investors. Why? Because there was more confidence. The final point I'd like to make is for us to create an enabling investment climate. Our policies and our regulations. The pension funds, insurance companies are regulated based on regulations that were created during the time when Mungo Park founded Africa. I don't know if he really founded Africa, but you know. And so these are outdated. And the finance minister yesterday was talking about pension funds, being local assets, and I see that is beginning to change. Kenya is looking at their policy reform,
Yeah.
and I think all other countries on the continent should be able to do that. And with that, we would then begin to see how we can start to build early stage investments ab initio with the foresight
Yeah.
of becoming an IPOs.
Yeah,
So
yeah.
let me just stop there.
No, thank you so much, Yemi. Thank you for that insight. Philip, if I can come to you, basically on the path to IPO, what role does M&A, merger acquisitions, for example, have in building a sustainable fintech? Or let me say, in our African markets, how does the role of M&A differ from early stage VCs, venture capital?
As a segue into that question, something to what
Yemi.
Yemi said, part of the challenge is a lot of the decision makers in pension funds have
Yeah.
been schooled in the classic theory of fixed income.
Yes,
Don't ask me to do valuations.
That's
so it's
true.
a very big one. So
Yeah.
getting around that is education. Now I
Yeah.
speak from that where one of the funds I worked with, we were fortunate to have the Rwanda Pension Fund invest in us. But it was a risk, right?
Yeah.
And others are starting to look at it. One of the things that you realize is pension funds, the informal sector is growing faster than the formal sector.
Yes.
So they no longer have the privilege of getting the premiums coming through, and yet they have pension holes to fill down the line. So they're starting to look and say, what are these alternative assets? So the question is there. To the point of Ghana, which was around regulation, Ghana's done very well in terms of putting a cap.
Yes.
I think we need to go further and put a floor so that you're really incentivizing them. But that said, in terms of the question you raised around IPOs, I think Ike said it, IPO is a destination. It's like saying, I want to be rich. That's a very broad thing.
Yeah.
But there's a journey.
Yeah.
And I think we forget that there is a path
That's
to
right.
that. And I strongly believe that there's a role for private markets before public markets. And what do I mean by that? For instance, take the work I'm doing in M&A. There is a lot of work around consolidation. When you find in the tech space, particularly in sub-Saharan Africa, if someone's solving a problem in Kenya, 9 out of 10 times, someone's doing it in Uganda, in Congo, in Tanzania. And so from a scale perspective, there is no scaling. And so M&A comes in to say, okay, how do we do a consolidation play? Really around building scale. Because then the IPO is confident in terms of, one, governance has been sorted out. You've got your team already. So there's a role that it plays.
Yeah.
I think a differentiation between VC and M&A is VC is very experimental.
Yeah.
M&A takes something and say, look, how do we scale this one? And I've seen far too many tech companies try to scale before they're ready. A wise man once told me, he said, if you are operating a business and it is only at 0.8% efficiency and you try scale 0.8, you will never cross 1. But get to 1.1 times
Okay.
1.1,
Okay.
you start to see that,
Okay.
that exponential scale. And to your point around our markets, where do the pension come in? One, it's on why I advocate for private before public, is our institutional capital markets are very limited.
Yeah.
To what she was pointing to. And our markets also are very shallow. So private, I think there is enough private capital here. Earlier we were having lunch with Ike, and I said, our companies and tech companies in Africa, or companies in Africa in general, are really, may not be that great at doing 5, 10, 20x, but one thing for sure they're great at is they're great at generating cash. They do cash very well. There's a running joke I have with some people over in Kenya. There was a company that was very tech-oriented around logistics, raised about 40 million in 8 years,
Wow.
and collapsed. I guarantee you, in Nairobi, there are probably 2 Indian brothers that have a logistics company,
Yeah.
and the only technology they have is, umefika wapi? Where have you reached? So we are good at cash flow. How do we get to build cash flowing businesses before we start to almost punish our startups to get to that 50x? And so I'm a believer in M&A as a bridge
Okay.
to get that one, to fix 3 issues: capital,
Okay.
governance, and scale. I'll pause there.
All right, thank you. Got that. Capital, governance, and scale. Got that. All right, well, Ike, in regards to Beta.Ventures, I would like to start by saying first, what are the ingredients required for a company to actually be IPO ready, right? And then also in regards to Beta.Ventures, your firm, what role could you play to maybe help these portfolio companies achieve these, get ready for IPO? We like to call it investment ready in the VCPE, but in your case, it's get ready for IPO.
Yeah. So I think one thing that would be good is to kind of clear the air on what an IPO is. An IPO is an initial public offering that takes a company from being private to public, and it sells shares to the open market. Now, for us as VC investors, there's a certain multiple that we need on invested capital.
Okay.
So it's not to say that we don't like the company, it's just that some companies are not VC companies. So if you see a company that has raised 10 million and they've given up 20%, if my hurdle rate is 10x, I need to cash out 100 million, which means that you need to exit at 500 million. If you're not a 500 million type company, then it's going to be bad for all of us.
Yeah.
So this is kind of the metric that most VCs operate by, is that the multiple has to be rich for us to be interested in participating. Now, what's required for IPO? I think when you look at dollar-denominated investments, typically investors are looking for exits in dollars as well, which means that startups have to look for exits in dollar markets. And if you talk about that, you're looking at the NASDAQ or you're looking at the New York Stock Exchange. So the requirements for IPO is actually very simple. Every unicorn in Africa has the requirement. 1, revenues. You need to have consistent revenue. 2, you need to have a valuation above $50 million. 3, you need to have raised 5 million of equity. 4, you need to have somebody that can take you public. Governance is another thing that you need to have. And you need to have stable and predictable financials for them to be able to value these companies. So if you look at the requirements, people meet it. But now you have to go to first principles, as in, why is it that companies are not doing IPOs? Before 2000, the average volume of IPOs on NASDAQ, and New York Stock Exchange, primarily on NASDAQ, was between 100 to 200 before 2000. Now, the reason is that the investment bankers that were bringing these companies to market, Hambrecht and Quist, Montgomery Securities, Cowen, all those knew that they were taking small companies and they were finding investors that were going to take these shares in the open market and hold and trade them. What has happened in the US is the asset management business has grown. So you now have the Black Rocks of the world. You have Vanguards. When you have $10 trillion under management, you can't do small deals.
Yeah.
The average IPO back then was 20 to 80 million. Average IPOs now are 200 million plus. So what a Flutter Wave is competing against is not the bare minimum requirement of being listed. It is the asset allocation of a BlackRock.
Yeah.
It's the asset allocation of a Vanguard. And the only thing that moves the needle for those people is an OpenAI IPO, a SpaceX IPO. These are IPOs that are in the 50 million plus, so if you're allocating 500 million in a chunk, you can do it. You can't allocate it to Flutter Wave because you would have to control the company. So the reality of an IPO in the NASDAQ or the New York Stock Exchange, the hurdle rate is much higher than the bare minimum. And since the 2000s, the average IPO in these stock markets for tech has dropped to less than 50. But the ticket size and valuations are significantly higher. So that's the hurdle rate. Now, what we can do at Beta.Ventures is we can help companies with governance and setting up. So we can set up and help companies do the things internally that they need to do. Now, what you need to do around that is now you need counsel. So you need transaction attorneys to be able to IPO. You need investment bankers that can take companies to IPO. And you also need an exchange that can accept these companies. And we think that there are movements on the Rwandan side to build something like that. So we're really excited about what comes out of that in the short term.
I mean, coming to Bobby, in regards to the chairman of the Development Bank of Rwanda, what specific policy changes or regulatory reforms are needed in Rwanda, and if you could also explain across Africa, to create a more conducive environment for startups in the goal to pursue IPO? And if you could also add, what are the Development Bank of Rwanda doing to advocate for these changes as well?
Definitely. Thank you. In some ways, I'd like to especially focus on Rwanda and maybe tap on some themes that were just mentioned. I think a challenge in many markets around the world are capital controls, and it's a big problem for investors, and I think people don't think about that very often. I mean, there are investors all over the world that denominate their investments in dollars. They think of everything in that rubric, and if they can't understand how to get the money back out, they're unlikely to put the money in. And I think one thing to just be very clear on is I think here the central bank has always taken a very progressive approach on that, has always been very real on that. It's not always the easiest thing to do. It's not always politically the most popular thing to do. But you don't hear a lot of investors, a lot of our partners, when we do business at BRD, we don't hear investors and partners talk about capital controls here. And so I think it's one thing to acknowledge that when we talk about some of the elements that are needed, I think that piece is so massive for investors globally, and even investors locally. Our SSB has to think about their pensioners, and they don't just think about their pensioners with whatever returns they can get here. It's a global marketplace. And so I think that piece is so important. I would also say, kind of consistent with that, the work here, of course, one of our sponsors with IFC, they've just done tremendous amount of non-sexy work of double taxation treaties and a lot of these other things in the region, so that we have, for example, Kenyan banks or Kenyan institutions that can participate in Rwanda, and a lot of this kind of the guts that needs to be built, which I would tell people in my own experience is less built globally than you think. I mean, we all spend a lot of time talking about Africa and wanting to emulate things. I mean, as someone who just recently did a transaction in the UK, it was not very easy. It was not very easy. I spent a lot of money on lots of lawyers. That was not what what would have been my investor's preference. So I think there's a lot of great work happening on the IFC side. And then I think what was just mentioned, I think so for us at BRD, what we really focus on, both in terms of our on-lending to commercial banks here, but also with our clients, is their governance, their transparency, their reporting, kind of putting them in the place that, of course, we coordinate often with the equity side in market about how we can work together. We're primarily a debt in terms of our instruments. But of course, debt can be a great instrument to apply a lot of governance. And so I think that's a lot of our role here in market, and I think I'm very proud. The last thing I would just say is, of course, BRD, we've listed bonds here domestically, most recently the sustainability-linked bond. And that, we hope, is obviously contributing to the shaping and the development of the market here. But I think one thing that was mentioned earlier is service providers. I mean, it's something that I think for us, we have a duty to try to grow more service providers in market, which is ultimately the pieces that will be needed with a lot of the elements that have been raised today.
Exactly, because I can only imagine you have to import the Americans or British service providers from the law firms, people who are dealing with these transactions.
And then you have to pay their school fees because they have to learn,
Exactly.
So that, we don't want to pay school fees.
Oh, okay, Fadilah, coming to you. And also just to let the audience know, so after this round of questions, I'm happy to find out if the audience has any questions to ask. I think there are mics around the room. If not, we'll go on talking. Fadilah, coming to you. So what are some of the key financial, regulatory, and market conditions we must, or those who are trying to enter into IPO, must have in place in Africa for startups? Because I know that's your sweet spot, I guess I should say. And especially those who are, trying to also view exiting, like the exiting strategy. So sometimes some investors will even come to them and say, oh, we want to see how you plan on exiting to see if we even want to engage you. And some startups are not even thinking of that yet. They haven't even broken even. But in your case, if you just talk about some of the key financial, regulatory, and market conditions some of these African startups need to have if they want to do IPO and then think of exit.
Absolutely. And before getting to answering your question, I would like to highlight that we have exit strategy on the continent that is very often talked about, right? And IPO is not one of them.
Yeah.
And I'm glad that you mentioned that. We're really talking about merger and acquisition and any sort of exit strategy. So to all the founders out there that are talking about presenting to investors and projecting using IPOs, perhaps to say, why don't you adjust it to reflect the real market condition? So within the whole ecosystem, of course, when we're thinking about IPOs and we're saying to ourselves, what would be the right condition? I would like to start with the market condition, which is around building a solid base of investors, both local and international investors. Everyone knows that I'm in the early stage investment space, specifically focusing on angel investors. What is the role of angel investors? Today, I had mentioned that we have about 2,050 plus angel investors, active angel investors across Africa, right? And together they deploy around $22.5 million. Is that a significant amount? No. Is that a significant number of angel investors? No. What about we take it to 50,000 active angel investors on the continent and deploy over 200 million on a yearly basis? Could that have an impact and an effect on setting the base and attracting even international investors to contribute to investing in those IPOs? I think it's possible.
Yeah.
Right? And that's what ABAN is doing, what we're doing today. The other aspect that perhaps I wanted to highlight when it comes to market is about liquidity. How does the capital market, right, is able to sustain liquidity, which is very important. And you will note that a lot of stock market across the continent are having a hard time creating that balance, which is something that, of course, is still continue to be discussed among key players, especially stock market players, as well as other ecosystem players, to finding the right way, that will be both beneficial for the investors, the startup, and of course, the framework makers. I'll put it that way. Regulation is very important, and we probably all agree with me that Rwanda has worked extremely hard to make the environment, the business environment, a lot more conducive.
Yeah.
And they continue to strengthen that environment. So one of the conditions, of course, is to make sure that there's transparency. And that in case of any challenge, the court, the laws can protect you,
Yes.
given that you're right.
Yeah.
Right? Which is something that sadly quite often we lack on the continent. So I see we don't have much time, so I'm just going to
Yeah. Thank you. Just quickly checking in the audience if we have any questions. Otherwise, I'm happy to dive on. Okay. All right. Philip, I wanted to actually come to you in regards to the 2 trillion capital, pensions capital. You alluded to it in some of your questions before. What can be done to unlock it? And in regards to the early stage investing, fintech, or other institutional investors who are only waiting for IPO. So how can we unlock it, and how can we engage those funds to those different areas?
I think we talked about regulatory reform, but I'll mention a couple of others. I think building one is on the education side, both for your fund managers and your capital allocators. That's really fundamental. Both sides need to get to know what this asset is like, not just when I'm fundraising.
Yeah.
I think the other one as well is on how do we build for secondary markets here that work. Now, that said, just looking at the region here, the treasury here, I think the 15-year is at about 13%. In Kenya, the infrastructure bond was at 16%. In Uganda, the 20-year bond is at about 15, 16%. Those are very hard to beat for people who just don't have to do anything. So I think if we can build structures for our businesses to exit, as long as we can see our ROEs beating that, those are kind of exit. And the more that we see those across the continent, it gets our markets more comfortable with those kind of exit. But I think in terms of also de-risking, blended finance plays a critical role there. But to get more pension capital off the sideline and in is a very hard question. I think that's a conversation that needs to continue. That said, when you look at US markets and all, many of the pension funds have made more money post-IPO than pre-IPO. So the question they have is, why am I coming in early?
Yeah.
In our case here, there is no early, so they need to play that role. But to Fadilah's point, angels need to play that role, get more active, and see that combination of co-investment in that space. I think that to me, I see would get more comfortable when there's a lot of conversation and education about what this means for our economies.
Okay, and as we quickly go around everywhere, I just want to find out your opinions. What impact does currency risk and the exchange rates fluctuations across Africa, and I know we all come from different countries, so you can use your own country just to, does it impact these startups or SMEs going into IPOs or not? So you can give us a yes, no, and a reason, and please use your own location. Some of you are in multiple countries, so you're welcome to choose whichever country. Currency risk, fluctuations. Exchange rate.
I mean, it has. I'm from Nigeria, and for us, it has shaken the very essence of holding our portfolios.
Yeah.
Because we are investing in dollars.
Yes.
And those entities, the startups, are actually doing their business in local currency. Therefore, if we do early stage investment at Rising Tide, so if I invested $50,000 2 years ago, our currency has devaluated about 600%?
No, 60%.
60%, right? And therefore, even if they are in Naira terms, making profits, hitting their EBITDA, it just doesn't make any sense. It is totally diluted when you convert it into the dollars.
Yeah.
So it's a serious impact.
A serious impact. Okay, thank you. Ike, would you like I just want to get some opinions before I...
Yeah, so I think it does have significant effect. Now, you're an entrepreneur. This is what you signed up for. So take your lump of coal and figure out how to solve it. And I think that's where really good investors can help companies. So with our portfolio companies, we realized that we had to accelerate certain strategies for them. So imagine a company that we have, it doubles revenue, meaning that its valuation should have doubled, but you've lost 40, 50% to currency, which means you haven't moved anywhere on a dollar basis. It means that you have to kick off your Pan-African strategy very quickly, diversify your revenue stream, Some of our companies, we've actually repurposed their products and actually moved it out to Europe, to the US, so they can get dollar revenues.
Oh, that's good.
The reality is, this is the climate we live
We're in, yeah.
This is the challenge we have selected.
Yeah.
And with our eyes wide open, we realize that currency is an issue. So imagine someone trying to get to an IPO in the US. This is number one point that people have is, talk to me about your currency. And there is no real answer to that except I'm hedging, I'm doing some other things, we're diversifying, but the currency issue is not going to go away, but it doesn't need to stop companies from being built.
Bobby?
It's a big issue, and I mean, just to affiliate with the other comments, I would make two small points. One, you know, again, my experience mostly on the continent has been, especially in Nigeria and here, and the contrast there is you can have depreciation, but it can be more predictable.
Yeah.
So, you know, as an entrepreneur and someone who is raising capital from investors, I think I've had a lot more success in markets where I can explain and predict and model and plan my business on a predictable depreciation versus an uncertain but yet certain depreciation. So that part is something I think policymakers could work on and get down. But then the second thing is obviously for me, as again, this is more in my entrepreneurial role, that's a lot of our focus on digital products. I mean, the reason we focus on music in Nigeria is a digital product, right? It allows us to export the product and really be on the opposite side of this currency piece. Obviously here, focus on carbon, it's the same idea. It's a digital product. So we've been very affected by it and of course focused on it. Now, to your point, not everybody can do that, but I do think policymakers can help make it more predictable, which I think would help significantly for investors and entrepreneurs.
Thank you. Fadilah, you want to wrap it up?
Absolutely. I completely agree with you. It would be hard to argue to solve the volatility of our currency. And I think if we do have predictable data, companies will be able to plan accordingly and anticipate on potential challenges and even how to solve it. But the beauty about entrepreneurship is it's hard, right, to be an entrepreneur. And you always have challenges. So that's just one of them that you have to figure out how to solve it.
Thank you so much. Thank you so much.